Hi, learners. In last video, I spoke about how to navigate all the sections of a valuepicker.in. Mostly we have covered. Now, if I just even with I told about the market brief sections, which is very important. Why to be cautious? Now market is down. Everyone is now discussing on this. If you are following a data, if you are following a system, you would have taken a exit or reduced your exposure well ahead, or you have also factored in and you are prepared that if any kind of a jar come, you will reduce your exposure. So when you are prepared, you are not doing panic, so you can take more informed, more calmly decisions. I don't think that any of the Indian application is beautifully in a simple way. We have given a caution. So this is the entire period where we have seen market is moving in a sector specific. As I already said in a video, that caution doesn't mean that full exit, and you need to take a reduce your exposure whenever market goes in a grid zone, or be a sector specific when you see that okay, no, these are the sector which can do good. Like now festival is coming, maybe festival sector will be doing good, so focus on those sectors which are like uh, does very well during festival time. Now come to the any business. Whenever we are analyzing how to navigate all this thing, I'll just show you that what is the I'll show you the force motors thing. Say if I go on a monthly chart, it was at a 1400 level. From there, it has gone to 25,000 level. Almost close to, you can say, 20x. People talk about that only invest in this, invest in that. Now, like micro cap, large cap, small cap. So don't no, don't differentiate. Look at the growth. Which companies are doing good? If there is a quality, there is a skin in the game, the very large company with a good management, having a long runway for growth. Look at those businesses. Even though the P may be that time initial phase may be high, maybe low, that don't look at the growth and how it is. You'll have to have like look as an investor's lens that it should not be one or two growth. Like why I say that transformer or Wagon, this kind of a businesses is taking a pause. Why? People will say time correction is going on. I would say that already valuation factored in as of now. If further tender, further revenue acceleration will come when government is announcing very large project, and the entire valuation is waiting for that. If it is not coming soon, so it is deteriorating as per the market sentiment. People are getting opportunities, some are selling this particular sector and moving to the next sector. So money moves from a one sector to another sector. If that particular sector is having a long tailwind, definitely that particular sector is going to perform. Now, why evaluation is more important than a valuation? I multiple time I talk about that what you are holding is more important. What is the intrinsic value of that business? And think about that you are a normal market participant. You don't know Warren Buffett valuations, you don't know anything. Now, if I ask you that you buy something from me, the valued 100 crore. So first question will come to you that what is your profit? Because if you want to infuse 100 crore, first objective would be yours, that you will be recovering your money and doing business. It's not for charity. That how fast you can recover. So what is your sales and what is your profit would be the last question. The most important thing is whether I'm a profit making business or not. And many other aspect also there, where it is located and all land value, asset values, all this. All together, if I'm saying it is 100 crore. And now you are saying, okay, 10 crore of, okay, fine, he's doing a once year. So it will take 100 years of time, in simple sense, to recover your 100th year. So it is not reasonable to give that amount. So similarly, why to look EV, EBITDA, market cap to sales, all these things? Because if I'm saying that 1 crore sales, 1 crore profit and 10 crore of sales, so you'll say that I need to get back my, even if I do 10 CR, 10 CR every day, how much I can grow 10 to 12 CR, even if I start with some new ideas with your business. So I'll be growing slowly over a period of year, 10, I can take it to 20. But with 20 share also, I'll be generating only two share of thing. What is the margin? What is your profit? Everything matters when you are doing things. And anything I feel that in any business, the reasonable thing is 10. You should recover your money within a 10 years. And if it is a manufacturing company, heavy asset heavy business, look at market cap to sales along with that. If it is a 2:1, 3:1, it is fine. The focus on profit is growing or not, and how that profit is growing, how long they can grow, all this aspect to be looked at. Then you analyze. I'll be talking about that framework also in my next video. What are the things to be taken care of? Now, now it is a 23,000 crore market cap. It was somewhere at a 2,000 crore market cap. It has moved almost a more than 10x. Maybe 1,400, 500 share market cap. And 2023, here it is 2023, we are seeing a uptrend. So you were seeing uptrend in a chart. I'll be showing you uptrend in a fundamentals. Now, come on our advanced insight. First of all, if I go on a fundamentals, what you are observing, the if I come on this for particular zone first, here. That snapshot we have given in a snapshot page also. So first you see on 2022-23 market cap to sales was flat. Company was available at, suppose 100 crore company, you are getting at a 200 crore of profit. Sorry, 200 crore of sales. EV to net sales, it was available at a very reasonable 0.47 valuation. Same thing, market cap to sales. Along with date, we are looking at with that lens that how much it values. So EV EBITDA was 4 here. 4 from, since it wasn't not doing a profit, that is why it is let it staged. But if you look at when they have jumped their profit, it was at a 4 EV to EBITDA. That means company is doing a profit which you can get back within a 4 years if you invest. The valuation was just 4x. 4x of the profit means I'm asking 100 crore, the company is being 25 crore of profit. So it is very reasonable. So whenever you look at anything below 10 is very reasonable. Now what company has done? Company has continuously has grown. If you look at the uptrend of a company, you will see that company has from this particular year, we have seen a uptrend from 66 to 329, 329 to 908. In this way, it has grown. So when company is growing in this rapid pace, you need to pay attention. Now, if you come on snapshot part, I'll show you. It is a clear uptrend. So any multi-baggers will be having a good uptrend, which has created wealth on reasonable valuation, long runway to growth, and continuous uptrend. And not only operating profit, also look at a cash flow. Company has continuously, this is not accounting profit. This is the cash actually company is having. Company is having a operating cash continuously growing from a 2023. plus they're investing in a fixed assets. What you do, you have earning in your pocket. Now, whatever you are earning, so that you are going to first saving, then saving or investing mutual fund. That for you, how you can appreciate your money by investing. How company can appreciate their money by investing in fixed assets. That will contribute to the top line. Now, for investing or buying a house, for you, if it is a buying a house, you may take a opt for a housing loan also, or you can do with your own accruals. Similarly, company do funding for their fixed asset to accelerate their or generate more cash, future cash. We as an investor already looking at a sustainable future cash generating ability of the company, not 1 or 2 years. So company should reinvest, company should less dilute. These are the good features of a good company. Initial phase, you are unable to do negotiate, you have a long runway, you feel that you need to dilute. Case to case, you need to look at why dilution is important. So this is a fantastic cash flow where company is continuously growing their top like operating activities, investing in assets, and very they are not taking much funding as well. Now, if you come at that company is generating net free cash flow. Now, if I show you that company is continuously growing, you are seeing an uptrend. Continuously, company is generating a operating cash flow better than PAT. So this kind of thing, no scenarios where everything is in uptrend and company is generating better cash, realizing due to depreciation or something, no. So that is the this is the gap. This company is excellently recovering, and what we have seen in chart, we have seen uptrend. So whenever you see operating market gives only valuation from your for your profit for the reasonable valuation it is getting. So it was available at a 4 years EV/EBITDA. So you can entirely recover your money by investing in a business within 4 years. Forget about the assets company is holding. So 100 crore का company है, you are getting it at 25 crore of profit. I may be holding a 10-20 share another fixed asset. That is the cash back to you. 25 crore plus 20 share. First year you are getting 45 share. Now you need to recover rest 55 share because company is holding some or other cash. Since you are buying a business, the entire valuation is of like based on a the entire assets and revenue generation and everything. So now, if you just see that company's operating cash flow is continuously growing, what we have, and reasonable payable days at par it is going. So that is why we have seen this kind of a growth. And this is, you take an example of a Newland, another company. Similarly, where to focus on? You will not see 2022, it is flat, jump in operating profit, jump in PAT, jump in EPS, continuously growing. Now, if you come on a cash flow, company is generating sufficient operating activities, investing in assets. Now, advance inside, if I show you that company was available at 8x, means what I said, within 10 years, if anything, you can recover. And if business is having a long runway, do that business analysis, what segment it is. First, evaluate whether you should study, whether it is worth, whether it is available. Now, think about as of now, it is highly overvalued. You may go, it may grow, and it may again squeeze. The again the valuation may get adjusted definitely, but you are not getting an 8x valuation. You may get after a excellent profit, no 20x valuation or 25x valuation. Always try to look at an early stage. So early stage, whenever you select business which are EV/EBITDA below 10, pay attention with a proper cash flow. And look at everything will be having a beautiful, not only chart uptrend. You will see a operating profit uptrend. Can you see operating profit uptrend? Can you see a dip? If you see dip, you will see the dip on here as well. Can you see some, if here it has gone up? Can you see some correction over 2025? Why? Because there is a dip. There is a operating profit dip in this. So chart and fundamental both should do complement to each other. So if you look at all these things, valuation, market cap to sales, CV, EBITDA, good promoter, now informations are available. You can fetch all the information by asking what they do, what they sell, what kind of a geographic expansion they are doing, what new things are happening. So now informations are available. Evaluate business properly. Look at businesses which are doing excellent profit year on year basis and look into that. In this way we have designed, no, so you can connect all the dots. If you want to see, no, I just want to check that how company has grown, so just look at a PE and EPS early phase, it was a 21x, fine. Now if I just play it, so you'll see that company is growing there. Now it is P EPS 66, so starting it was a 21. Companies continuously grown their EPS as well. So it is like though these are the thing, no, that you can understand the journey of the company as well. It was available at a market cap to sell 2x. Like a company is doing 200 crore of asking 200 crore of valuation and market cap was around 400 crore. It is reasonable. So whenever you look at such kind of opportunity, pay attention with a market cap where is having a long runway. Long runway because I'm saying wagon business, transformer, they have a limited supply. We may have a lot of requirement, lot of projects, future export opportunity. Market always discount all these things. And many thing no has grown. Now whatever this manufacturing wagon manufacturer or transformer manufacturing companies, they'll have to grow further with a pace of EPS. It was at a reasonable price. I'll show you that why I'm saying just have a look at this. I'm not saying Daryl will not grow. I'm saying that evaluate what phase you are buying. What phase you are buying is very important for you to look at what stage you are actually entering in this particular stock. Market cap to sales was this now here. Do you think that 3.85x, fine, but 0.55x got an expansion now at a reasonable, may go to this particular point again. So similarly, it was at a 5x, now 44x, came down to 22, again reasonable, but not at this zone. So always look at where you can recover within 5 years. Now you can recover if you buy this business, you can recover after 22 years, which is reasonable for you. And definitely look at a cash flow, sustainable cash flow. Whether they can do next 10 years cash flow, definitely not. Definitely not. It is a different industry. So understand all these things. Don't only look at it is good, it is good, it is good. Good and bad, you'll have to see a lens from a very professional investor lens. Like you'll have to see a long way whether company can generate further cash. Here, I don't think any of the companies work on manufacturer. They will be having a very that expansion initial phase is over. Now just wait for a good one more last run and exit. That it would be the right approach. You have many other good businesses, healthcare, pharma is doing fantastic. Yeah, why to look at the sector which is already at a 20x, 30x valuation of the EV EBITDA? Thank you, everyone.